I would say, bonding with our distributors. So we had a top performers incentive scheme, and where we took about 15 distributors to Bangkok. Yes, quite a few of them were rewarded in other ways also, and this ensures a lot of loyalty to the company and a long-term association with the company as well. In the market expansion and distribution network, yes, we set up distributors in regions like Kanpur, Rajkot, Karnataka, Madurai for the automotive segment, and as well as Kolkata for the industrial segment. We also expanded in the Middle East in a couple of countries as well as in Central America. So adding four new regions and geographies apart from India in our kitty where we are promoting our brand. Among a significant development is there is an investment of about 1 crore which went into R&D equipments in the last HY. And this is primarily because of the expansion of the research and development facility that we are taking up in the Ambernath premises at our existing facility. So that's at about 1,500 square feet of dedicated R&D, area that we are trying to develop, and the hiring also is gradually in progress for the same. Yes, there are a lot of products that were launched in the last 6 months. Agriculture sector being products being one of the key areas where we expanded into. And yes, as we grow into different kind of geographies, the demands are quite different. So we also made specialty products for the low temperature applications. And yes, there are a lot of products which are done for the Indian Army development also. So we received a transfer of technology for a product which is required for by the all the armed forces, be it Army, Navy, or Air Force, which is called as Petroleum 89, and which helps us to make the product in-house as well as participating in the upcoming tenders of defense. So this transfer of technology, just to mention, was also from DRDO. Apart from that, yes, there were a lot of operational improvements that were done in the past 6-8 months, owing to a lot. I mean, our CEO, Mr. Kishan Sata, he's led from the front amongst many of the initiatives. And a few of them, as you can probably see on the slide, which are mentioned here. So we changed our strategy from a dispatch-based approach to a first in, first served kind of a process, reducing our lead times to supply from 7 to 10 days to about 3 to 5 days. Besides that, we reintroduced our B1D mother warehouse for improved automotive supply chain. So the on-time deliveries, percentage went from 64 to 77, and in full went from 41 to 98, ensuring we promise our customers on-time in full delivery and maximizing our output on that side. As a inventory management initiative, yes, we definitely tightened our inventory controls. And now, we are basically controlling our inventories across depots as well as in the factory premises also on very strict norms. So that improves our working capital cash flow management as well. A lot of cost reduction and automation initiatives are also happening within the maybe some are small, some are big in nature. So, for example, one was the in-house weighing scale that was installed. So we had a reliance or dependency on the outside weighing for all our input raw materials, base oil being one of the key raw materials, and shortages was a big issue in base oils. So to avoid this, we installed this in-house weighing scale, so which ensures that the shortages and everything else can be really tracked very well. And if the issues are there in terms of the shortages, then we can debit the same to our suppliers. Besides the cost optimization, initiatives also included installation of automatic labeler, automatic goods lift for our new warehouse, for the plant inventory movement, and we have an upcoming Bangalore, warehouse which we are coming up with, which will be the GST number has already been received, and the operation should start in another couple of weeks' time. So, which is also expected to reduce the operational cost of the South region by about 15 to 20% by maintaining inventory there. We also see definitely there will be a sales growth in the South region, and that's why we have put this depot in place. Apart from that, yes, there are a lot of daily and monthly review mechanisms being put on place to enforce accountability on all our departments. and implementation of credit control norms, and that also helps us in cash flow management and reducing our debtor days from 60 to 48 as of October 2025. So for a few people who would be new to our Arabian Petroleum as one of our esteemed investors, we started our journey back in 2011, and since then we have added milestone almost every year, and that's how we have grown. Transitioned into public limited company in 2015 and listed in 2023. So effectively now we have about two subsidiaries which are one of them operations already started, which is Arzal Petroleum, which is 100% subsidiary of APL and which is based out of Dubai. And Lavisa Technologies has also been incorporated as our 91% holding subsidiary for delivering into specialty lubricants range. The overall market, what is the market if you talk about of lubricants in general? So we estimate that the lubricant market in general is about 3,029 kilotons, which is growing at about 3 to 4% CAGR. But we are having only very less than 1% of the market share overall in the lubricant industry. So there is huge room for us to grow in all the industrial, consumer, and the commercial lube spaces. Few of our R&D project and product enhancement initiatives include the pillable type rust preventives, the rust protectors for submersible pumps. So apart from water-based rust protector, we also launched oil-based rust protectors for submersible pumps this year. We have specially formulated water washable type of neat oils. And, as I have mentioned on the earlier calls also, we are also focusing on a lot of water-based chemistries in general, how they can replace oil in the application, considering the cost advantage that it has to the customers. So an initiative on that front was taken up, and we successfully are able to do that and implemented at a couple of customers also. As a matter of backward integration, we are also looking at fatty acid amides manufacturing, which is one of our key raw material, and the project has almost come to completion as a part of R&D. So now pilot batches and the commercial batches scalability would be under consideration. Apart from that, yes, there is a Metcon S620, which is a neat cutting oil package, which we have recently introduced. This is keeping in line with our idea of, supplying to the lubricant manufacturers themselves. A lot of products that we backward integrate and that we manufacture. So this will be taken up for the Dubai upcoming show at Auto Mechanic as well. Apart from that, yes, Frizon MG series is one of the extremely low moisture type of refrigeration compressor also, which are developing for a key OEM based out of India. Some new product, yes, synthetic chain oils, some synthetic engine oils like 0W20, 0W16, and now even 0W8, right from APSP to APSQ, that is what we are focusing on. Apart from that, Rust Protects PX2 is one of our anti-corrosive coatings, which is again a wax-based coatings, moving away a little bit from the oil type of coatings. But yes, this was specifically made for defense application. But now this we are planning to take it into the industrial applications also by launching it on the aerosol form. So we serve a lot of segments, sectors, industries, which are probably mentioned over here on the slide. We do private label also for a lot of companies, and you might be able to see for the company names over here. Yes, Arzol, our brand basically is our prime focus area where we want to develop our sales in our own brand, and that's where we tend to really focus and coordinate on. So yes, in the government sales also, we got an order for about roughly about 80, 90 odd lakh rupees from the Indian Army very recently, and we're executing it in the next coming month. So our focus has always been to develop a lot of products on the defense side and development of products, transfer of technologies from DRDO, identifying the applications and the opportunities that they have in the government space, because not many people have reached the government, side on the application part. So we're trying to focus on that, give them requisite products because they have been, on a legacy basis being using only PSU companies' oils. So we're trying to give them solutions on that and build a long-term business out of it. Yes, exports definitely. As I mentioned to you, a couple of Middle East geographies were opened up recently, which we have been vying since a very long time, and successfully we got very good distributors out of this, industry. One of them where we are supplying specialty refrigeration compressor oils also has opened up for us. So this is very key, I would say, milestone that we are able to enter in the GCC space for the refrigeration and compressor oils, where air conditioning HVAC is the highest, in terms of per person usage. Yes, I mean Central America, Latin America have been our focus areas, and there also we have been growing quite well. So a lot of island countries have been recently added to our, I would say, kitty, and we are focusing on business on that front. Yes, in brief, a snapshot of our the clientele that we serve. It ranges from a lot of different segments, a lot of different sectors, as you can see over here. As I mentioned to you, we are sector agnostic, so we supply to most of the sectors that require lubricants. And I mean, I would say, I would put it rather that way, that any kind of moving part, it would require lubricants. And so we find our application anywhere and everywhere. The quantity is just what it differs at. So yes, we supply all over India, pan India, and the dot now, which was not present in South, will also come in the next presentation, as I already mentioned to you. So the warehouse is upcoming in Bangalore, and which will be operational very soon. Yes, the exports also are across continents. Yes, there were a few, remarks about the tariffs that have been that are impacting the, India-US trade. But for our industry, luckily, we have no exports to the US directly, so we are not impacted by any of the tariffs that have been laid down by the US. So a few of the, awards that we have received in the past from the Industry Outlook magazine, as one of the top 10 metal and fluids manufacturer. A few of the recognitions that we have, in terms of our approvals, all Volvo, Daimler, a lot of, the ISO 17025 accreditation from Enable, which was very recently renewed for 4 years now for our laboratory. And yes, we do have our, technology transfer from DRDO for a lot of products that we've been working on. As I mentioned to you, in R&D, we have been constantly investing, and now we have invested in very sophisticated test equipments like the ICP and the FTIR, which are used for both quality control and as well as research and development work. And that will assist us to basically identify what are the different metals, what are the different elements rather in every oil that are being used, and analyze competition sample, analyze our own in-house samples, analyze our development samples also on that front. The team that we are comprising of is of my father, my mother, and my brothers, Dharman and Vandan. So Dharman, he takes care of, he is the CFO and takes care of the export business in general. And Vandar, he majorly takes care of the operational side of the business, which is now being also taken up by our VP operations, Mr. Kishan. The numbers on the comparative side of for half year one versus half year of the last year, and the percentage increase on the different line items. So yes, I mean it was a very positive year for us, and in the next HY also we expect the same. So looking forward to do justice to our investors who are there with us on a long-term basis. Some balance sheet items for your review, so which are mentioned over here. I think that is it from my side. And Looking forward to all our questions, which we can discuss from now.
Thank you for the introduction. We will now begin the Q&A session. Participants who wish to ask a question are requested to raise their hand. We will have the first question from Vishwender Singh.
Hi, sir. Am I audible?
Yes, Mr. Singh.
Sir, I wanted to ask a few questions. First is on the volume growth. What has been our volume growth for this half as compared to last year? And what has been the major driver of our growth that has led to this 20-22% top line growth?
Yeah. So volume growth was about 21%, and the total. I think there is some echo. Is it from my side? Are you able to hear me clearly?
Yes, sir.
Yeah. So the volume growth was attributed also to a lot of process oil where we have ventured into, apart from growing into all the segments. So automotive, industrial, private label, exports, and the government business, all the five verticals that we classify, our business into grew along with process oils. So there was nothing very one particular segment that has really contributed too much to the volume growth. That is how I would put as. But all the segments in general help us to grow in terms of value and volume both. So we are really happy that on all fronts, the team has been doing well, and we strive to do that in the future.
Okay, sir. So I wanted to confirm volume growth has been 21%, right?
Yeah.
Okay. Another question I want to ask is what is our current status on the new factory that we were installing some more reactors? Are we on track for it commissioning in the next 12 months?
Yes, so there has been certain development, but that is too early to describe about as of now. So once we have information that we can share with all of you and a concrete set of information that I'll be able to share with it. But as of now, the idea with which we were talking about an expansion has taken off, and there are certain things which are being in the pipeline, but I might not be able to disclose that details as of now. So please wait for maybe another quarter or so, and you will see, you will hear from us very soon.
Okay, sir. Another question on the Dubai subsidiary. How are we planning to ramp up the operations and what is our expected timeline to break even on a EBITDA and PBT level?
So, see, Dubai subsidiary is a trading entity per se. So, for us, the expenses over there are not very significant. Only the expenses are majorly operational expenditure in terms of human resources and the other compliance, whatever is involved. So, I don't see, I mean, in the next 6 months or so, we would be breaking even in Dubai. And to be honest, we would have already broke, I mean, I need to see the number exactly, but we would have probably had break even numbers by now also. The idea with which we've established the Dubai subsidiaries also, as I've mentioned before, not just import but also exports from there to elsewhere across the world, and from here to Dubai and elsewhere across the world. So Dubai, I would say that will play a very important role of the subsidiary will play an important role in the coming future, and we estimate that by the year ending, we should be able to do at least about, say, around 7-8% of the turnover that we have been doing here in the Dubai subsidiary. And that will only exponentially grow from there.
Okay, last one I had was margins have declined year over year. Like it has gone from 6% last year to 5% now. So any major reason and what should we look at and expect going forward?
No, so if you look at half year results, maybe that would be the numbers that you're talking about. But if you analyze on the year on year margins, I would rather say that year on year margins, if we compare on an average, the margins has grown, and that will definitely keep on growing as we have reiterated over many calls. So looking forward, we see that year on year margins will improve in the coming in the coming few years. That's definitely going to be there. And yes, sales growth also will definitely be our focus area in the coming years.
No, I agree, sir. The sales growth will come, but like, what will be the trigger of our margin improvement? Like, what will be major driver for the growth in margins? And what type of margin should we expect going forward, like in the second half and next year?
See, I cannot put an exact number to it, yes, but what we have already, seen over years in the, historically, is that we have bettered our margins year on every year so far, and we expect to do the same. At the same time, what you asked, that what is the driver of margins? So a lot of factors are driver of margins. Firstly, obviously, it is focus on that kind of product areas, specialty products that we have been focusing on, which increases our margins in general. So one part of it is selling. How well we sell, what kind of products we sell, what kind of, I would say, margins we take from the customers. That is one part of it. Second is controlling the cost. So yes, our industry typically works on volumetric basis in terms of discounts. So when we talk to refineries, definitely the higher the volume I have, the higher the discount that I may be able to get from them. So on this front, we have been trying to, yes, grow on our sales side also. This year we were aggressive on the sales side as well, and keeping intact our margins or probably bettering them historically. So we were able to do that, and that is one primary reason, is because we were able to source well from the refineries. So that's one of the key where we have built our strength in the past 1.5 2 years, that I would say. And this is something that we would continue to do so. Yes, besides that, there are a lot of additives, raw materials that we use, chemicals that we were buying. We eventually we've started doing a lot of backward integration, manufacturing certain key raw materials ourselves, and that will also lead to an improvement in the margins in the coming years.
Also, sir, last question. You have been seeing some issue with the packaging. Your partners were reducing your overall utilization. So, is it improved now? And what should be the capacity utilization going forward?
No, I did not get your question. Which partners?
In last call, you mentioned that you were having some difficulties for packaging the smaller packets. So
Hmm.
you were not utilizing your full capacity. So is it
Right.
resolved now? And how should we look at it?
No, so the challenge always remains, as I've told you on the last call, is the space that the inventory consumes, and the bottleneck always remains the packaging part. Manufacturing does not be a bottleneck per se. So for that reason, as I mentioned to you previously, we have devised a strategy where you will hear from us soon, maybe in a quarter or so, where we improve our utilization, move certain assets to a different place. And yes, I think it's too early to tell what we would be doing, but then the idea with which we are going is something where we'll debottlenecking our entire capacity as of now, and keep something with the existing one with a different focus, and move the bottlenecks to elsewhere, to a different place. So I'm sure you will hear from us soon, and that will resolve your query on this particular aspect.
So how much capacity will increase, sir, going forward?
Uh, that that number exactly I'll be able to tell you maybe in a quarter or so. Maybe you can be in touch with our R team, but as soon as you hear from us on the announcement that we would be making, you can get in touch with us.
Okay, just last one question. You were planning to publish monthly or quarterly updates about the business, not financial or anything, but
Yeah.
regular updates. So are we looking to start from it this quarter?
Yeah, we would be trying to do that from this quarter. So from January onwards, you will be probably hearing from us a lot of operational highlights that would be coming up with in the of the last quarter that we have done, and moving forward, this will continue.
Okay, sir. Thank you.
Any other participant who wish to ask a question can raise their hand. We will have next question from Tejas Khandelwal.
Hi, sir. Am I audible?
Yeah, there is hi.
Hi. So, sir, my question was on the cash flow side. So,
Yeah.
if you look at our cash flow statement for H1 FY26, so our inventories and trade receivables have increased by almost 6 to 7 times year on year. So, are we seeing any cash crunch there? And what is the comfortable level for both receivables and inventories going forward?
No, so there is no cash crunch that we are seeing. In fact, just to apprise you that this year we have not even taken any additional banking limits that we have been, year on year, that is incremental limits we have been always taking. But this year we have not taken the same. So we are very comfortable in terms of the cash flow front. Yes, definitely with increase in the sales, the debtors gets added up to a certain extent. But I mean, that is a matter of, that particular date. If you see 30th 9, probably that would be the case. But that keeps on changing and it has come down significantly now. So again, it is subject to what kind of sales we do, how we are receiving the payments and all. But the entire idea of going to direct customer or small direct customers have been changed, and now we are servicing most of our smaller share of direct customers who used to buy probably 50,000 worth of metal from us or 1 lakh worth of metal us through our channel. So the channel always gives us the advance payment or a payment timeline of about 30 days or so, and we are able to probably pass on certain margins to them. But yes, effectively, we don't compromise on the margins a lot, but we improve our cash flow. So there is no cash crunch as you have asked for, say, and we are very comfortable with the existing banking limits also, and lot of free limits are available as of now.
Okay, sir, got it. And what is our current capacity utilization?
So as mentioned on the previous calls, it's about this year it's about at 75%. The challenge does not really remain in terms of manufacturing. The challenge remains in terms of filling and the bottling of these kind of uh, the retail packs. That is what I would put as. And Per se, we don't really see a challenge in manufacturing. And as I told to Mr. Singh also previously, that we are not seeing this as a capacity utilization, but we are also seeing this as a more of a strategic initiative where we are going to do something different, and you would be hearing from us soon about it.
Okay, sir. And do you plan to raise any debt going forward?
Doesn't look like, to be honest. I mean, if we continue the current run rate, what we are doing right now, I don't feel or I don't think so that would be required. Yes, if there is any especially capex which would be coming in, which would require certain funds out of the box, then we might look at it. But so far, nothing has been really decided.
Oh, okay, sir. Got it. Thank
But
you.
for working capital, I don't think so. So there's quite enough comfort for us, right?
Okay, we got it. Thank you. That's all from my side.
Yeah.
Do any other participant have any questions? So next we'll have Vishwendra Singh.
Hi, sir. I wanted to ask what will be our growth triggers next year going forward, apart from the Dubai operation?
So growth will always be multi-pronged. As I have mentioned to you before that individual verticals are being led by different people, and all of them have been given certain targets to achieve. So we obviously are looking for growth from all our verticals per se. Yes, but the main trigger, I would say, or main growth areas could possibly come from industrial lubricants and process oils in general. And apart from that, there are certain long-term tenders that we are trying to participate in. In case if we are able to get through that and get some volumes there, because a lot of activity, pre-activity, which is required for probably more than year or a couple of years, that has already been done. So if we are able to get through that, then definitely that will be a very big impetus to our for growth as well.
So, looking on these contracts, you mentioned BRO contracts, we are doing some from next month. So, how are the tender pipeline looking forward? So, like, are we expecting any new orders in the next weeks also?
Yeah. So tender participation is almost every day. So our teams fills about 200 tenders in general in a month. And obviously some of them we win, some of them we lose. So it's a part and parcel of the game. But the idea with which we are working now is getting our make approved at a lot of, companies or users, where earlier only PSUs were probably, awarded the tenders. So that is, we are building up a sales team even for government business, and the head has already been appointed for that particular business. And now we are having about 7 people in that team, and that team will definitely come in the coming few months. That will grow, and we look at a lot of such initiatives like I mentioned to you, a transfer of technology, which only a few people have in the industry. So that curtails down the number of participants that are there in the tender-based business. So that helps us possibly as a private company to win such kind of tenders also. Apart from that, yes, Army, Navy, Air Force, Defense, Ordnance factories is something that we're looking at. Just yesterday, probably I was informed that we successfully did a trial for Ordnance factory in Ambazari in Nagpur, and that was successful where they were looking for a replacement for an import substitute. So that are the kind of projects that our team has been constantly doing, and that will actually help us to build that long-term association and avoid a lot of open-based tenders where we can possibly control. I would say not control, but then yes, uh, influence the number of participants that are there in that particular tender.
Yes, sir. But don't you think that these achievements that we are attaining, we should be like filing it on exchanges so that more of our investors can learn about the recent updates, because it will definitely increase more visibility for our company. So don't you think that it will create a positive impact going forward for our shareholders?
No, absolutely, it can create a positive impact. As you are indicating, probably that we need to be more active on the exchange in terms of filing this kind of success stories that we may have. So a lot of trials, happen on our side, particularly if you maybe are associated with us for maybe a couple of years, you might know that we work on application-based, customers, where we identify the problems that the customer is having and try to resolve it. So a lot of trials keep on happening, and I would say such kind of trial approvals, keep on happening. Maybe every 3 4 days there is an approval which comes in terms of, but the quantum of the business in that way may not be that significant. Like for example, it may be to the tune of 5 7 10 lakhs or so, but then still it is a good win for us because that helps us to enter that particular customer, or maybe that's a more margin based product line where we are able to focus on. So such kind of wins always comes in, but then we deliberate over what kind of impact that it has on the total numbers, because eventually investors normally see the numbers in general. So that deliberation is on. But then yes, you are right in that fashion that if such kind of successes happen and which have, I would say, not a very significant but still a sizable impact on the numbers, we should be publishing them.
Okay. Last question from my side. Are we expecting similar growth rate in top line for second half? And what will be a growth rate going forward for FY27?
Yeah, so for the next 6 months or so, we definitely expect the same what we have done over the last halfway. Moving forward in the next year, maybe not putting a number to it, but yes, if not exactly there, we would also be very close to expected to be close to those kind of numbers that we have done in this year. So a modest about 15-20% growth, maybe that is something that we are looking at from all fronts. So on a consolidated level, that should really be the number.
Okay, so that will be for all for my side. Thank you, sir.
Thank you.
If anybody else has a question, kindly raise their hands. Thank you for the engaging discussion. I now invite the management to share their closing remarks.
Thank you, FinPortal team, for organizing this earnings call, and thank you all the participants that have joined this call. It was indeed good interacting with all of you and taking all your questions. And thank you for being invested in our company, trusting us, and being there in a long-term journey of Arabian Petroleum Limited. And definitely, we are here for the long-term business, long-term growth, and long-term, I would say. Betterment for all our investors that have shown trust in us. So thank you very much. That's it from our side.
On behalf of Arabian Petroleum Limited, thank you for joining today's call. You may now disconnect.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.